The Federal Reserve just met, and as I'm sure you're aware at this point, they didn't cut interest rates. I'm not going to bore you with those details. The question, though, then becomes why? The Federal Reserve prefers PCE, core inflation, as its main metric when making these decisions. That metric most recently came in at 2.6%. Yet back in September, when they started their initial rate cuts, that PCE core inflation rate was higher at 2.7%. So then that, of course, makes you wonder, was this politically motivated? That is what we're going to talk about here today. As always, my name is Derek, and I got my degree in finance. You don't have to. Let's dive right in. Okay, so before we talk about all the important details, I just want to clarify something that I've heard repeated that is a misconception. And I've heard it repeated even from some very well-versed people in finance and economics. And that is that the Federal Reserve is a private institution like a private bank. It is not. The Federal Reserve was created by an act of Congress, the Federal Reserve Act of 1913. Now, the Federal Reserve has certain components that resemble a private corporation, namely two main ones. The first is that member banks receive a 6% dividend from the Federal Reserve. The other one is that it acts independently of the US government. Now, there are reasons for both of this. The first is that member banks hold reserves in the Federal Reserve, so they get a return on their money. That is fair. But any and all profits above that dividend, guess who they go to? They go to the US Treasury. Secondly, the reason why the Federal Reserve does not report directly to Congress or the executive branch is to allow independence. And that is a good thing. You wouldn't want the executive branch or Congress controlling the interest rate every single election cycle. That would be horrible for the economy. So that is why there is a degree of independence to the Federal Reserve. It is not, though, a private corporation, and the chairman of the Federal Reserve is actually chosen by the president and confirmed by Congress. Okay, now that we got that out of the way, let's discuss why the Federal Reserve chose not to cut interest rates, even though PCE inflation is lower than when they initially started. Now, Donald Trump, I'm sure, is going to say that this was politically motivated. Trump and Powell have this feud, and it's kind of a one-way feud from Trump to Powell. Trump wants Powell to cut interest rates. Now, why? There's probably a couple main reasons. One, it's good for the stock market. It's good for the economy because it allows companies to grow quicker, and free money or easy money allows the stock market to grow because people have access to capital easier and cheaper to invest. The other reason that has been floated is potentially to refinance or really roll over a large portion of the national debt, close to about $10 trillion that is due at some point this year. Of course, if that debt is rolled over at a much lower interest rate, that saves the government money. And because of the stark contrast where Powell did lower interest rates in September of last year before the election cycle, Trump says that this is politically motivated. So, is it? Well, on the surface, it sure does look that way. But if we actually dive into what's going on, perhaps there's some more nuance. In September, when the Federal Reserve initially started to cut interest rates, the path towards 2%, which remember, 2% is the target rate for the Federal Reserve. On a side note, do you know where that target rate comes from? It literally comes from an interview on TV in New Zealand back in the 80s, and we've kind of just stuck with it. Anyways, that is the target rate. But the Federal Reserve also has what's known as a dual mandate: maximum employment and price stability. Now, back in September, when the Fed officially pivoted policy to start cutting interest rates, the path to 2% seemed more clear. We were moving in that direction, and because of that, the Federal Reserve started to cut interest rates. And this is a good place to talk about one other thing that you need to understand all of this, and that is the neutral rate of interest. It's also known as R star, Basically, this rate of interest, which is unknown at any time, so basically economists and the Fed have to try to find it, at R star, or the neutral rate of interest, the economy has maximum employment as well as price stability at that inflation level. So back in September, even though inflation hadn't hit 2%, the Federal Reserve can begin cutting rates, and as long as they remain above R star, they will still have an inflation fighting effect. That is why the Federal Reserve can start cutting interest rates and then pause. That's why they haven't raised interest rates again, even though the inflation fight has kind of stalled. Okay, so then what changed today? The most recent PCE core inflation report came in at 2.6%. This is lower. So why didn't they cut rates? Well, primarily for two main reasons. One is that this report actually came in higher than expected. Most forecasters expected inflation to come in at roughly 2.2 to 2.3% on the PCE core metric. So this is actually higher. But in reality, the main reason for this is Donald Trump's literal own policies. Those are the policies of tariffs. There is virtually no forecaster, and Powell has said himself that there is virtually no forecaster that does not have tariff inflation baked into the future forecasts. Tariffs are inflationary by the very definition of raising prices on importers and thus raising prices on consumers because they either can buy more expensive imported goods or more expensively made American-made goods. This, in my opinion, is the primary reason why the Federal Reserve has chosen to pause interest rate cuts. It is unknown how much these tariffs are actually going to affect future inflation. So because of the job market, and that's the next thing we have to talk about before wrapping up this video, because of the job market, the Federal Reserve has chosen to keep interest rates stable. Now, if the job market was weakening, then the Federal Reserve may have instead chosen to continue cutting interest rates or the federal funds rate. But because the job market, the literal most recent jobs report, came in at 177,000 jobs added, which Donald Trump, of course, took credit for. This is well above expectations. The unemployment rate also remained stable. So what does that show? That shows that at least on paper, the economy is strong enough to remain in a high interest rate environment. So because of the employment numbers, which Trump took credit for, and because of Trump's literal own policies, the Federal Reserve chose to keep interest rates unchanged. So then, was this politically motivated? Now, obviously, we can't say for certain. I can't read Jerome Powell's mind. With that said, we can look at his previous actions. And I will say this. Do I agree with Jerome Powell for everything that he does? No. Has the Federal Reserve been slow in the past to change interest rates, both up and down? Yes. With that said, do I think Jerome Powell is doing this for a political motivation? No, I don't. If you actually look at the Federal Reserve's policy changes, especially under Jerome Powell, but pretty much in general, they are the least politically motivated thing that happens in our country's economically, politically blended sphere. They are almost always slow to change, specifically because they wait for the reports, like the CPI inflation report, like the PCE inflation report, like the jobs report. So because those reports are usually a month behind or a few weeks behind, they are late to making those policy changes. To me, that is a good sign that the Federal Reserve is mostly data-driven. Now, does Jerome Powell have beef or doesn't like Trump? I don't know. With that said, it's also important to note that Donald Trump was actually the person who chose Jerome Powell for his post. Jerome Powell literally has the job because Donald Trump selected him, and then he was confirmed by Congress. So, in my opinion, what's really going on is that, yes, on the surface, PCE inflation looks lower when it comes to the core metric than it was in September, but in reality, the economy is in a much different place. GDP growth just went negative. Now, I made a video previous to this one talking about how that wasn't really a red flag, but it shows how much tariffs are affecting the economy, and they're not even totally implemented yet. Trump paused his tariffs, the majority of them, for 90 days. So we don't even know if in about 65 days from now, when they actually go into effect, if he's going to pause them again, is he going to cancel them? Is he going to modify them? Are there going to be new tariffs? And because of that uncertainty, of course, the Federal Reserve is going to just hold rates stable because the employment market, which is the other side of their dual mandate, seems to be strong. At least on paper. Now, we can argue all day if the job market is actually strong. I know people are struggling, those who are looking for jobs, to find a job. But the Federal Reserve looks at data, and the data right now is strong. I hope this video was informative, whether that's to understanding how the Federal Reserve actually operates in this hybrid public-private way, or whether that's in clarifying why the Federal Reserve chose to not lower interest rates, or if it was just informative in general. If it was, please consider subscribing. It helps the channel out tremendously. If you like personal finance, world economics, and investing broken down as simply as they can be, then you are in the right place. With that said, I hope you have a fantastic rest of your day. I hope to see you in the next video. Until then, take care.